Hey guys, I'm your bro BTC. So I'm just going to give you just a little tips there on how to trade, right? So like I said now in one of my videos, I said that you stick to 1 hour time frame. As here we have three time frames. Like I will tell you the main reason why I say those keep those two time frames, or let me say three time frames. So the main reason why I keep those three time frame on my expos, I was like 1 hour time frame is that I use the daily to know where the market is going, like to know the overall trend of the market. Like, is this week are we bullish or this week we are bearish? So the 30 minute frame, the 30-minute time frame. So I do look for where the rejection box that usually happens in the market are where I take trade. So it has been long I posted the trade, and I'm just giving you an example on how to catch all this precise entry on all this trade. So I'm just going to give you a past data based on how I do it. So firstly, I trade two type of I trade two type of entry. Like when I say the firstly, I say that your entry should be at a bullish engulfing. Your bullish engulfing should be your entry point, and your bearish engulfing what should be your what entry point. So what I mean by that is these are your point of interest, or these are your area of interest where you will take all those trades from them. Okay, so now let's the interest. I know you guys know what is bullish and what is bearish, so I don't have that time to be coloring there. So we all know this one is a bearish, this is a bullish. We all know this is a bullish, and then this is a bearish, right? Color red, color like, or depending on which type of the color you want to use. So firstly, now I trade this type of entry. So sometimes we do have when markets sorry we do have when markets just came in, tap in this place, and then move on. And sometimes we do have when market valuates the low and then take off, which is like the take many people stop. So there are two places where you can do that. So the first strategy, I can call it I can call it that I trade a swing high and swing low. That's just the basic of the strategy. So the swing high and the swing low, I do like normally the way we're being taught by many random mentors on YouTube or online. Liquidity are being written above the high and above the low, right? And then the other one, I traded the Malaysian support and resistance, which is this series. Like, let me just use this. So, which is this series. Market we just came in, tap in without even evaluating the low of this place, then a market continue. So let me just give you a practical live example. So now let me just go back to my past data, then I'll show you. Firstly, now the strategy I told you that I use is like sometimes a swing high, a swing low, and sometimes that Malaysian support and resistance. The main reason I'm going to 30-minute time frame is to look if there will be a breakout of that place, right? The first one, if you check this place now, what happened now? If we look the overall trend of this market, we're looking up and lower low, higher high, lower higher higher. So this was a recent one here before the market started giving a bearish movement. So all I have to do is I'll just mark the high, and I will just mark the high. I look at what happened. This one, it takes a day before the market came in. So there, I will show you what to do so that you won't be missing entry or maybe like over analyzing any pair. So you can choose at least maybe any pair from like 3 to 4 pairs. Right, but randomly, I just trade only this on GBP AUD, and then sometimes I trade synthetic, which is volatility in this. But I'm just giving an example on this one. And on my expos, I say that you should avoid pair that is being paired to USD. Although they work mostly on those who even have USD, such as the gold, the Euro USD, the BPU. But mostly, I don't use that because of what there is always a news that happen. So maybe your entry might happen when there will be news, and they will take you, and you know what news now, it spikes up and down. So when it comes, firstly, now this is a place, like I said, a swing high, a swing low. This high was being taken. I will go to my 39-minute time frame, then I'll look for, let me see if the market close back into this range, into this line, into this my vertical line, then I will short the asset, and then I will target the nearest low, or I will stay with my fixed risk reward, which is 1:2 or 1:3 or 1:4, 1:5. It depends. So your your stop loss or what you are risking determine the RR you are looking for. Same thing again here. This is a swing high, swing low. Sorry, I forgot to say that there is something we call break and retest, right? It's all in that series of the swing high, swing low series, right? It's all the swing high series. So when this place fail to hold, we definitely have the market will break the previous low. The market will surely go back to retreat the zone and then keep off selling, right? So this and same scenario go to the bullish trend. Yeah, same scenario go to the bullish trend. Maybe the market the market might come to this place now. The market will just fail to hold this place. Market will go up, then will come down, will tap in, and then which is break and reset. They are all the same method, all the same ways on how to do that. So let me just give you a practical example now. So there are a bunch of examples that I will be giving you, like which are there, but I'll just be using the recent one I've marked, and have like some of them I took the entry and some of them I failed to took the entry. Like this one now, market failed to reach this zone, right? And this is the second one now. This is like the high was being swept. Then I'll go back to 30-minute time frame. I'll look for a rejection block that will close below this. My stop loss will be the high. My take profit 1 to 2, 1 to 3, fixed you to or you can any lowest low you see that you that price might go to that place and clear those liquidity, then you go there. So and when we keep on going, you'll be seeing the trade. Like now, this is a place now where I say that we have this type of one that do fail, right? So this place now, this were we're supposed to sell from this place when the market was trying to go up. But what happened? Market breaks it. Market came back in future, but market didn't came to that place. Ideally, it takes almost 1 to 2 days. Then the next day, the market came in and tapped. So you guys were like, "Oh, this is swing trading. This is like you can do this shit." That's why I say you can go. For me, I stay to GBP USD. That is just it. Sometimes I trade the other random pairs, like random pairs I trade them, but I mostly now stick on GBP AUD. So when market comes up, you tap it. Same thing here. This was the low we're expecting. Market what happened? Market broke it. It went back, retraced it, and then we keep selling. So you can keep seeing entries, entries, entry if you want, right? Then we can go a day that we'll go to like from Monday, Tuesday, Wednesday, Thursday, like even Friday, there'll be no trade. Like, but if we zoom in, zoom out, there are trades here. This place for it was being swept, then the market goes up. I've come to this place. This was even a two entry, right? This was a break and retest. Market retests from this bullish engulfing that we're expecting to buy. The market sell. Then market now take this high because this was on external high. Market take the high and then start selling. And if we zoom in to this place, you see in a day you like have multiple entries. This was a place, although all of them like we might surely hit as a then this place happened around this sign here. What happened? It gets swept, it fell down, and then secondly this place too. The high was being swept and then the market fell down. And the same thing again, the break and retest at this zone. What happened? Market failed to come to that place and the market continued going. So if we check down again and again, we'll be seeing those type of entry here. We're expecting for the market should come back or market to fail. That's why I say sometimes you can use many pairs if you want. But for me, I just like if you stick to one pair, you know how they are like how the price usually work, or you can even understand how the price work. Like same thing here. Then what happened? Market swept the high. So like you see, so this example that I gave, we hardly see this, right? Like that was like we have not seen that. So we only see this one that when the low will be swept, then the market will continue going up. So when that place, when the low will be swept in, that same thing do come like this scenario now. This is the same thing. Market fails, the market taps, and then you go to a 30-minute time frame. Then you look for a rejection block, or you can even go to 15-minute time frame to look for that rejection block. So when you see those rejection block, any confirmation entry you are like you are good with it, then you can take those entries. So as you can see, this is just a pure trading, no indicator. So this was the trade again. Let me just shoot this line in to candlestick. So this is a place now. This was place I was expecting to buy when the market buy it. What happened? Market broke this place down, right? As the market broke this place, the market rallied back. So what gave me the more assurance that the market came back to this setting point was like this inefficiency. Although I don't combine inefficiency in my stuff, but sometimes when you see an inefficiency which is favorable, that will give you a high standard probability. So now look at this place now. There is FVG, but does it work? No, it doesn't work. What happened? It got valuated, right? And same thing now on this place now. So this is how you can trade a random just a single pair for a 1 hour time frame. So when you give this a month of practice, just use live. Don't do you can do the analysis, but don't use past data. Use present data like tomorrow, next tomorrow. Just use it. Create a prime data. Then you will definitely see that your own rate is increasing and you'll be taking random trade. So if you enjoyed this,